And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Sunday, August 1st, 2021. Friday's trade started off interesting that we continued to the downside. The NASDAQ put in a slight new low over what we saw at the start of Globex on Thursday, and followed through again during Globex, reaching 14,811, and then just picked up the rally once again. And we did see a little bit of a sell as we started our sessions on Friday, but the buyers were fairly strong. And right off that opening, they just immediately pushed up pretty high. In fact, I think they got all the way up to 14,980 before then spending time and just declining pretty much through the balance of the day with a little bit of a rally towards the bell. Now, what we're doing now as we start in Globex is the market has once again pushed itself back above 15,000. That's a positive for the advance being back in control. And if that's the case, then we would likely put the minute wave 4 completion point right here. Because if you remember, what we're counting now is the minor fifth wave advance. And that advance is moving higher. And if it does and gets up to the resistance zones that we're looking for, then we're going to be completing minor wave 5, intermediate wave 5, primary wave 5, and cycle degree wave 3. And that would mean that we're staring down the barrel continually now towards a cycle degree fourth wave correction. And initially, I would totally expect that cycle degree to get back to the area of the previous fourth wave of one lesser degree, and that would be the primary degree. And I'm just going to flip real quick out to that weekly chart. Come on. And we'll take a peek as to where that is. That's right here. That's the March 2020 low, 6,629. We're just pushing back above 15,000. So over the next amount of time, which I think could be between 1 and 3 years, maybe more, possibly less, the way things are trading now, that we're going to drop fairly quickly. It'll be a sudden, quick jolt. Now, again, we're now gotten through the Fed. We've gotten through the major tech companies, the big titans and their earnings reports, and still are now moving back above 15,000. So what does that really tell us? That the underlying strength remains in the market, that they're not, the market and investors are not convinced that everything's over. Now, we do have quite a few other analysts that have spoken pretty boldly about the fact that we're looking for a top, And there were many that felt it would come last week on those earnings reports. It started off as if that was going to be the case, and then it did it again as if that was going to be the case, but it all failed. So I've also read, and with respect for this particular analyst, that they revised what they were saying, and that they believed that there would be a decline, but then it would just be a launch pad for the next leg up. And the reason that I respect that is because A, it matches directly with what I've been looking for. I'm not looking for a major collapse of the market right now. I still think we still have additional upside to put in to cap off all the fifth waves up that we're counting, and set the stage for this larger correction that others are also looking for now. So until the market really begins to show us the cracks in that, and I'm not sure where it's going to come from, because again, remember the Elliott wave does not necessarily tell us that, oh, look for the fundamentals. A fundamental reason is going to tip this market over. There are a myriad of reasons out there. The most serious one that we're all confronting right now is this Delta variant of the coronavirus. It is really running rampant across the country and causing a lot of problems and putting a lot of pressure and stress on people that are already stressed out by the pandemic. So we could get another one of these for sure. That was the last time the Delta variant kind of hit the headlines in the news and market reacted. Because if we get back into a situation, excuse me, where they start shutting down the economy in a way that, you know, people are going to be at home, it shouldn't really hit us that hard. It could just be more of a shock to the system rather than, you know, that because most of the companies still, employees are still at home. Apple, Amazon not because they do delivery, but Apple, Facebook, Google, Netflix, Twitter, Square, a lot of these companies, they're even now changing their plans to have people come back to the offices, at least here in California. And I believe one, I think it was Twitter, it was San Francisco and New York, they've now put it indefinitely just work from home. So this all could still have an adverse effect on the market because it affects local economies more than it affects the federal economy or the country's economy. Because downtown and people going to work and into office buildings really supports a local economy more than it supports our national economy. Nonetheless, I think that there are still plenty of reasons for this market to turn around and head lower. Now, if that's the case, if it turns here and it starts breaking back below first moving averages and then through some support levels, and we do manage to get below 14,774, well, then our next level that we really were looking for all along was 14,711, down to like 14,700. That would be an area that would complete this minute wave 4. And there is potential for it to drop further. And if you remember, the alternate view that I'm taking here is that this finished only minute wave 1 of -5. And this is minute wave 2 of -5. And then we have a very explosive third wave, taking us to new highs in the 4 and a 5, taking us even to additional new highs way above. Now, that fits a lot of scenarios. That fits a lot of how other people are viewing what could be coming and what could happen. So we need to continue to allow for it until we start to break above, first of all, 15,074. And then in turn, we break above 15,131. We start breaking to new highs. Then we've got these numbers back, 15,220, 15,460, 15,700. We've got all those numbers still out there and they are still probable to occur. They definitely have the potential. The probability, it still is probably equal weighting. And I don't think it's really dropped. Maybe the top one, we'll see. But going above 15,130, I think that once this rally gets going, that should be a given. But first, we may drop down and get ourselves to finish the minute 4. If we have to put it there, then that's where it's going to go. And then minute 4 failed. In fact, it failed to take out that low. Not that it failed because the structure's there, A, B, C. And I can count 5 down. So the structure fits, and a failure in a fourth wave is not that uncommon, particularly in its current position, because we're still within that final legs up for a very long-term bull market. Having that underlying support to the buy side really remains. And we saw that they did kind of just really buy it up very strongly. And first thing Friday morning, they bought it up very, very strong before just kind of going sideways for the balance of the day, basically. Now, what we can look for is if it starts to break down, we've got our levels, 14,700, 14,625, et cetera, all the way down. There is potential for it to come all the way back to here. If it does break below that level, 14,642, then this is not a fourth wave. We'd have to look at that as being minute wave 1 of minor wave 5. Okay, and then this is the wave 2. Wave 2 then cannot break below this level, which is the low of currently minor wave 4. And that is at 14,441. Cannot break below that level. If it does, then we're back to putting this whole sequence as complete, plus not only minor 5, it would be intermediate 5, it would be primary 5, and cycle 3. They all are going to complete there. So we have some serious market stuff going on in terms of what are we going to be looking for the next month, for the next 2 months, 3 months, et cetera, et cetera. Right now, looks like that's going to hold. They're pushing the prices higher. NASDAQ is up 42 as I make this update right now. Dow's up 134, S&P's up 1850. Even the Russell's up 940. That can change in a heartbeat. We all know that. We still have the Asian markets to come online, and then we have the European markets come online, and they still need to react to well, actually they don't, because they're the ones that created it. So they're going to be reacting to the upside, and maybe we'll just push higher. So we still have those markets to come in and fill in what they need to do. But right now, if it moves above 74 and then it moves around above 15,100, pretty much puts that seal into place. But right now, I will tell you, right now, this whole corrective phase is still, even this coming back up, it's all a big box. So the box was created by the activity that we had last Tuesday. So that huge drop. And then we rallied, and then we kind of went sideways. We rallied a little bit more, and then we went down because of Amazon. And we just kind of go sideways, but in a rally fashion. So the market can still go up here and turn and come all the way down and go below that. Then it's, maybe it's an ABC, or the market is here. This is A, and this is A, B, and now it's doing a C wave up to put the finishing touches on the B wave inside. That would still leave us with a C wave down. Fortunately for the NASDAQ, the S&P is looking pretty strong that it is done with its fourth wave correction. And the rally is back on. That's the way it appears right now within the S&P. That gives a lot of support to the NASDAQ also doing the same thing. Because of the overlapping stocks between the two indexes that carry heavy weighting in both, those being Apple, Amazon, Facebook, Google, Microsoft, Tesla. They all carry a heavy weighting in both of the NASDAQ and the S&P. So I would suspect that they would move in the same fashion. So both head up, they both start to move into new highs, the rally's back on. And once that is, then I will be more than happy to go back in and run the Fibonacci's. They're going to go from here would be, well, let me go back down there so we can see it more clearly. Sorry about that. We would then put, if this comes, that's going to be the 4, then I'm going to run the Fibonacci's extensions from here to here to here. And then we will get additional levels of where we can expect this wave 5, then the minute wave 5 to move up and then complete minute 5, minor 5, et cetera, et cetera. So that's where I'm going to leave it. Continue to trade using your moving averages. Moving averages are our best friend. And when we put them on our shorter term charts, the 1 minute, the 2 minute, and the 5 minute, we're going to continue to be able to look for them in sequence in terms of that they were all in alignment to go up. And just quickly taking a peek as we finish up today's update, we can see that they are. There's the 50, there's the 200. The 20 is up here. The 4 and the 8 are above that. So they are aligned down to the 5, the 2, and the 1 are aligned to go up. Again, they're short term, so that can change by the time we get up and ready to trade. But right now, they're in alignment, suggesting we go higher. That's where I'm going to leave it for right now, folks. And the next update will be tomorrow, August 2nd.